Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Thursday edition of Benzinga's Pre-Market Prep. Spencer Isreal, Joel Elconin, Dennis Dick, Mitch Hoch with you this morning, as we are every morning. Well, yesterday was all fun and dandy and exciting. Market rallied off the Fed, and I'll let Dennis say it, actually. Dennis says it better than me. Where's my...
It's gone.
Where's my soundboard? And it's gone.
I did the soundboard for you.
No, that's not the one.
Kaplooey?
Anyway, I think I deleted the soundbite, but we've given it all back. That's the point. We've given it all back. That is the point of the morning. We're going to talk about that rally and the unwinding of that rally and what that means going forward. We'll take questions from our chat. Our guests today, two guests on the docket, Marc Chaikin at 8:15 and Buck Andrews at 8:35. Today's show is also sponsored by Inform. I'll put the link up on the screen there, in4m.info. There it is on the bottom. Let's go to Joel, and we'll go to Joel's charts, and we'll have Joel explain to us what exactly happened overnight.
Still scratching my head on this one. Had a nice rally overnight. Took out that high from yesterday, got 5 points above it, 78.50, and then 335 this morning. Boom, we turned around and we lost all that. We went red, we went more red. Pre-market low 32.50. Now this is interesting because you didn't even get to yesterday's low, which is 39.25. I think I would have had a bid or two out there. So a tricky day going into the quad witch. A lot of jockeying going on, and this is a tough one. Don't have a great feel for the market yet this morning. Gold is in the green by 4:30 at 17.31.30. Silver's going the same way for a change. Silver is up 22 cents. Actually 22.2 cents, room 222 at 26.27. And Bitcoin, that's just hanging comfortably near 60K. We're up $175 at 51,155. Triple D, you sign off at 8 o'clock. You got a picture of the markets.
Yeah.
Check your phone a couple times.
Yeah. I go to sleep. Markets are fine. I wake up in the middle of the night, take a leak, and I guess I'm going trading because this was 5 a.m. and I saw the hammering happen, and I was like, okay, well, I got to rework out of some stuff here. So went in there, so many efficiencies at 5 a.m. Anyways, I worked out of some of the stuff, some of my longs. I was trying to work out of some of the tech longs and trying to cycle over because I thought we were going to be having an okay day today.
I know.
And that takes me completely by surprise. They turn around and hammer the stocks and give back the entire Powell pop. I don't know what to say. I mean, I've been worried about the market for a while. I was worried yesterday morning, but then Powell comes out, tells us he's never going to hike interest rates ever again, basically. And, we get this huge rally. So you think, okay, well, you can't fight the Fed. I mean, the Qs go from 317 to 324 and kiss the yesterday's high, the 2 day ago high. So now we give it all back overnight on basically nothing. I don't know what to say. You got support in here, 316 to 317, because this was, where we were trading before Powell gave the Powell pump. So I think you do have some trading support here. So I think you bring in your shorts maybe, but I don't know. I it's such a tough market. Doug Cass always says the market with no memory. I mean, we are in that right now because it completely forgot about pumping Powell. Spencer, maybe this is a time to go to the meme.
Yeah, Spencer.
Sure. David from Twitter, wherever you are, sent us what I thought was a rather flattering picture. Rather flattering picture.
Yeah. Looks pretty good.
Yeah.
He's showing it right now. Boom. I tell you.
There's our friend.
Yeah, pumping Powell right in the middle, pumping as he always does.
It's pumping Powell.
We got Joel. We got Joel.
Joel.
We got
Mitch, man, you're caught.
Mitch,
Truly.
Spencer too. I had no idea you guys looked that good without your shirts on, man.
I don't even know how to
right
put my
there.
hands like that.
There's a lot. There's a lot you don't know about me. There's a lot you don't know about me, right?
Wow, that's
Spencer can
impressive.
pump some iron there, huh?
David from Twitter tipping the
We
cap.
love. I saw that last night. I couldn't stop laughing.
I want to
That's
see
good.
Spencer in those swimming trunks, though.
Yeah.
I mean, the only one that really looks like that in real life is me.
These photos are from.
Yeah, because the swimmer over there. If you look like me, I got the big belly going now. Yeah,
Who's
I got
Hans?
the six pack going on with the six
I just
beers in
don't
my
know- I
six
don't
beers
know
in my belly.
Who was Hans and who was Franz? It's unclear. Unclear
I'm Hans, and this is Franz.
from
And
this picture.
Powell's here to pump up the markets. What's pumping Powell thinking right now, though? Like, okay, he gives a nice pump. He's like, okay, mission accomplished. You know what? He's strutting. He's showing off his stuff here right now. And then overnight, they slap him in the face and they say, hey, you can control the short end, but you sure as hell can't control the long end. And they're hammering the TLT. It is off the lows, but they gave it all back and then some. So TLT is now trading on a new low of the move, which is never good if you're long. You never want to be long something making new lows on the move. This is fantastic for banks. You can see the banks showing a lot of strength here this morning because think about the environment. Powell not raising the short end and the market raising the long end for you. That's called spread. And that's what the banks want to make. So this is why the banks continue to rally. It's all TLT driven here right now. Powell's not going to ever raise the short end. He's going to lend, out and we're going to have the long end there. It's going to be a beautiful environment for the banks. And that's why the banks continue to show a lot of strength. I mean, across the board, Goldman Sachs making new highs, Bank of America, new highs, JP Morgan, new highs, Citigroup, new highs. I have some pairs trades in a couple of these, but totally hedged off. So anyways, I don't know. Is this the bank trades definitely got crowded now. It's been running, but for good reason. I mean, this TLT's been hammered. This is what the bank's been waiting for.
Yeah, for a long time. They still got, I mean, you can look at the chart and say, wow, we've really come off. But if you look where we were at, back at the beginning of 2019, it's still more room. It's a trend and it's broken. And man, they can just, borrow just the arbitrage there for them, right? For the banks. I mean,
Yeah.
printing money. But want to do a few earnings here? I know we got Marc coming on in 6 minutes. A few earnings plays or any particular movers jumping out to you. I saw this UPST, and I never heard of the stock before, but Upstart Holdings. See the rally in that one, Triple D, or is that something not in your world of trading?
It's in my world of trading, but I don't know what the news is. Is this takeover or something? What's going on?
No, it's literally just earnings. That's all it is.
Craziness.
Earnings report. Yeah. I'm like Joel. I never heard of the stock.
I've traded it, but
earnings,
wow.
Earnings out last night, and they made $86 million in
86.
revenue,
Wow.
in revenue last quarter. Yeah, I mean that's it. That's the news. Is they had earnings and they gave guidance, and they're going to acquire Prodigy Software. They announced. So I mean,
$90 for me. I mean, this is a pretty easy call on the long side. You got up to 91. Not an easy call, but you're leaking now. Right here, you had this daily high right here as well. Where was that at? Didn't quite get to 93, but I don't know. I think if you're long this thing or you want to try and short, you're going to have to pick an intermediate level ahead of that pre-market high, giving all these people their money back from when we were under 50.
Yeah. I was going to say something, and I just forgot. The Upstart thing kind of distracted me, and I forgot what I was going to say.
Well, I'll take it back to the markets here because we're not all upstart traders here. But I mean, what do you think on tech? Like, let's go talk tech because everybody's into tech. I mean, we do put the double top in yesterday, Joel. So we get, what we're talking about is yesterday's high, very close to the previous day's high. We would completely reverse off of that level overnight. Despite trading up, like I said, for most of the after-hour session, the entire after-hour session, the market was positive. Then around 3 o'clock, they start pulling the rug out from under, and they just kept hammering it to give it all back. I mean, I look at yesterday's low now, 315.68, and I think, okay, you got good support there. got to hold that. I just think it's such a crowded trade, and we don't know. We still don't know if the tech top is in. I mean, and what I mean by that is the valuations are just stupid. We know that for a long time, but it's been forgiven. I mean, on all these stocks, it's been forgiven. Every stock that Kathy Wood owns, the valuation's nuts, but she doesn't care because she's in a bull market, and and as long as you stay in the bull market, those multiples continue to expand, and there is growth there too. But Tesla had a great candle yesterday. It was a complete reversal. Like it's at the lows, rips up higher, looks great. And then, boom. So is this just another pullback to buy? Like I am really, usually I have a pretty good feel for what's going on. But last night, this overnight movement took me completely by surprise because I did not think, I'm a big fan of the 2-day move where you get a counter trend move. Okay, now we got some people going. Powell's winning. You think you're going to get a follow through move. And to give it all back, makes me spooked again.
You know what?
Maybe this is time where, you're just buying dips and selling rips, and maybe you continue to do until it doesn't work anymore.
Well, I'm looking at the Qs, and until these things cleared, the Qs 325, just under 320. Yeah, look at that. I mean, until you look at all those daily highs, 324 and a half, 325. So didn't even sniff it yesterday. So I mean, just looking at the Qs, look at this technically, until we clear this 324 and a half, 325, then hey, you want to do a projection of this move from 337 to another 30-point move down from 325 takes you under 300. So it just looks tired. You had the break, you had the rally. You're trying, but it just looks like people want out there. So that's looking at the Qs. I like to flip, from bullish to get super bearish.
Well, we all do that. That's human nature.
But no,
I do it 10 times a day.
But I mean, I just think there's expiration here. I'm just gonna wait a day. I'm not gonna make any, big major calls. I'm gonna see what happens on the quad witch, because we were talking about this on the pre-market show. They could sell this thing off today, right? And things look really bad, and then they just have 89 billion trillion to buy on the open tomorrow, right? Jack it up on the open, and everyone that's short is up the creek. Everyone that sold out their long is up the creek. They blast it off the open tomorrow, and then they sell it off again. So it's just tough expiration, and I'm just going to wait. Do we break down for the lows from this week at 39.13 main on Monday, or do we break out? Finally break out and get to 4,000 or 400 in the spider. I think it's just a tough range, and you got to be a little bit patient here.
The other thing to consider is that everybody, and in Reddit especially, is interested in big money fast. And they're not interested in owning the mega caps as much. And we've talked about this. They're not interested in the Apples and the Amazons. I mean, we can just feel it from the show. Like 7 years ago, 6 years ago, 5 years ago, when we started doing the show, everybody wants to talk Amazon and Apple, and they want to talk the big guns.
Never did.
And nobody wants to talk those stocks anymore. They want to talk TKAT. Because it's the new hot, stock. And I'm not saying I'm just saying this is the market that we're in. We're not interested in trying to make 7-8% a year. I want to make 100% in a week. I see a commercial. There's a new commercial going on CNBC. I don't know what the hell. Some guy started with $4,800 or something. Did you see this commercial?
No.
I just caught it yesterday. He's advertising it on CNBC. Started 2 years ago, my account $4,800, and now that account has built up that it pays me $50,000 a month or something, and he's built the account up. It was a new advertisement. I'm like, this is what the mentality has become. It's like, it's so much greed out there. It's like, get rich as fast as you possibly can. And it makes me just think like, I think we are in the most epic bubble that, like even, from a multiple perspective, like we're now topping over 1999 in a lot of stocks. Like there wasn't stocks trading 80 times sales, and now, people have just got to come in. They just got, I'm going to go TKAT. And, this thing blasts off. It's NFT play, right? So, these NFT stocks, $2.70 a week ago is $28. I mean, this is where the action is all moving to. People want to just like jump in to where they're going to get rich the fastest. And that's not good for the overall market because
Horrible.
you got, like the S&Ps and, you got rotation. You still got, and there's still the majority of institutional money isn't jumping in all this stuff. But as there gets to be less and less, as more and more people are interested in the fast buck, it makes you think that there may actually be a correction in some of the other stuff just because people are selling that stuff. We've been talking about that, selling that stuff to raise cash to buy, the newest hot idea. I mean, there's people paying, $49 million or whatever, for digital art or however much it was, if there's even more than that. I mean,
69 million.
it's
Yeah.
all this age.
Can I get Marc on and
Yeah, bring Marc on all these thoughts.
Yeah, I'm sure Marc also has thoughts. Marc
Yeah.
is the founder of Chaikin Analytics. Joins us every other Thursday at 8:15. Marc, do you see the same thing?
I do. I'm willing to talk about Apple. A power gauge rating on Apple has gone bearish, as has the rating on Zoom and Netflix and Peloton. Guys, there's a changing of the guard.
Is it a small cap market going forward? Is kind of what I was trying to get at. I mean, is it like a complete changing of the guard here where we've been, tech no matter what? And are we now, one, moving into a value market, but two, moving into a small cap market as well where people can get rich faster?
Small caps are on fire, and I agree with Joel, 325 on the NASDAQ. Absolutely critical. It's where our long-term double exponential smooth averages, so it doesn't mesh with any of the conventional indicators. So we held 300. We bounced very weakly, and that's reflected in a lot of the tech names. It's reflected in software, which is really my beacon for the market. If the market's going to grow, it's semiconductors and software. And when trends in value and small caps finally assert themselves, they last for years. It's not just a 3-month passing fancy. So I agree with you. Small caps are really where the leverage is in the market. You don't have to buy junk. I mean, there's plenty of quality small caps out there from, remember Foot Locker is a great brand. It's a small cap stock, small to mid. Right. Signet reported really good numbers this morning, small to mid. Retail small caps, I think, are a really interesting investment area and trading area.
There's been so much rotation from those high PE stocks to the low PE stocks. I mean, Viacom is the poster child for this. I mean, the PE was maybe just completely stupid when it got down to like 5 times earnings or 4 times earnings it was trading. And now, you've seen this run from like in the last 3 months from 30 to 90. And, it's the poster child for we have moved into a value market. And, we've seen this over the course of the last 10 years where tech has outperformed value for so long. We've seen these we've seen these points where value comes into favor for a week or two and you're like, is this the time? Is this the time? This is the longest, I think, we've been like 3 months where value has been outperforming tech now. So it's more than just, a little blip on the radar now. It's actually a trend. And the question is, I guess, are we going into one of those prolonged periods? Like people don't realize in 2001 to 2007, value significantly outperformed tech. So, I mean, and growth. So, I mean, we go to these periods of cycle. We just haven't seen in the last decade. It's been growth. I mean, if you want to punish the maximum amount of participants, slamming these growth names and continuing this value trade would do that. So does the trade continue?
It does continue. I don't think tech is dead, but I don't think it's going to be a leader. It's going to participate, but it's going to be 1 step forward and 2 steps back. So you've got to think of selling tech on rallies like we've seen here in the last, call it 3 days. Yesterday was a pretty embarrassing day for tech because you had all the ingredients with what Jerome Powell said to assume that rates weren't going to starve off the tech sector PE. It's really a PE compression that you're seeing. I mean, the difference between now and 2000, in my view, is that, there are some stocks with no earnings, or very little in the way of earnings, but they do have revenue. But the leaders that took us to the highs in September, Microsoft, Amazon, Google, and Google, by the way, still has a bullish rating in our model. So, there's some havens for tech, but call them mega cap growth stocks instead of tech. And now you're broadening the tent to include a lot of stocks that people own. People still own Zoom. It's one of the most widely owned stocks, even among the millennials. They're getting creamed in it. And
Where
when
do you think Zoom is a year from now?
I don't know. It could be 100.
Yeah.
It depends on
Getting lower, though?
adoption. It's heading lower. We've had a bearish rating on it for 4 months, 5 months. The problem with Zoom is they didn't monetize the COVID stay-at-home surge. And so to make up for that, they're rolling in other services like video, telephone and chat and, sort of productivity software. Well, it's not proven that people want to get that from Zoom. And Ring Central has a very competitive product. It's really a wrapper around Zoom. So they're going to be out there competing with some of their own clients. They're going to be out there trying to get you to pay for services. When you're at 100 times earnings, whatever they are, 100 times revenue, there's no margin for error. So I think it's going lower. I wouldn't own it here. And the question is how low? And I've been a big proponent of not buying puts in an uptrend that shows you a persistent pattern of higher highs and higher lows. So only if you get that rally like we did around earnings above 400, above 425, would I go on to the put side in Zoom. If you buy puts here, you're sort of buying puts into a mini hole. So very, very downbeat on these stocks.
What about, I was just looking at DoorDash as well, and this is a stock that we've dogged on this show basically since it came out, just saying, and I just think there's going to be competition. It was a stock that completely benefited from a stay-at-home economy, and, you can see what the stock has done in the last months, went from 220 to 131. I mean, the valuation on this one is just stupid as well.
I think Motley Fool may have recommended it yesterday. I'm not sure.
It's come down a lot. I mean, it's come from 220 to 133.
Well,
but
at the highs, DoorDash's valuation was bigger than most of the people who use them. Like, I don't know if it's bigger than Chipotle, but there was an interesting report out that at the peak, DoorDash had a valuation that was bigger than the people they serve, which is insane because they're not making any friends out there in the restaurant world. They're taking a cut, and it's hurting profit margins for restaurants. Back in, it's very analogous to a bull market that probably nobody on the call has ever, a bear market, 1969-70. You had a stock called Levitt's Furniture. It was a chain of, I think, 20 furniture stores. It had a bigger valuation than Montgomery Ward, which was the largest catalog retailer in the world at that point. Company eventually went bankrupt. We're starting to see stuff like that. The problem is, for everybody on this call, the final phase of a bull market can get crazy. And so if you try and call the top, you're watching stocks go up, and then inevitably, if you're like me and you're human, you dive in at the peak. And so it's a little bit of a balancing act right now. You know that the knife is going to cut deep, but you don't know when.
Yeah,
Mark, I love having you on the show because you can even bring up things that I don't remember.
There you go.
You make me feel good. No, we're online with Marc Chaikin, Chaikin Analytics here. Let's just talk about just real quick about the expiration, because I'm trying not to get super bullish or super bear. I mean, obviously bullish, the trend is up. We talked to you about a year ago, during the pandemic, and we had the expiration, the March expiration with the gamma unwind. I'm hearing some different things in the futures markets about, some exposures some different firms have coming up to this expiration. What do you think? You think we just kind of just like ride it out the next couple of days and see what, read the tea leaves next week? Is there any gamma unwinds? What are you hearing out there for the quad witch?
Well, first of all, you zeroed in on a really interesting pattern. It's a trader from Chicago who, and he's well known, and the name eludes me. I have 3 of his books behind me. He said 22 years ago, looking at trading patterns, that if the week has been up, Thursday is typically a down day. If the week has been down, Thursday is typically an up day. It doesn't work all the time, but if you look back, you'll see that the Thursday reverse effect is even stronger than turnaround Tuesday. So I think you're onto something that we will get a down day here, where the futures look horrendous right now. But that doesn't tell us much about Friday. And I think Friday is probably going to be an up day. We haven't seen a sort of washout with a Thursday, Friday down in a long, long time. So I think today down, tomorrow up. There is some gamma unwind, according to Charlie McElligott, who is the wheel on this type of analysis at Instinet.
Instinet, boy, I haven't heard that.
Yeah, well, it's a research firm now. And he has been talking about a gamma unwind in the Qs.
Mark, I want to ask you about a couple of individual names here. First up, Chat's got a memory like an elephant, man. They want to know about Pinterest. You still bullish?
No, Pinterest has been bearish, and now it's neutral because it reclaimed our 200-day average. I love the company. I think they're doing everything right. Their tie-ins with Shopify, the whole idea of the kinder, gentler social network, but the technicals aren't right here. Okay. And by the way, Fubo, Dennis, power gauge has turned bearish. So
Fubo finally is turned bearish.
Yeah, and, reality caught up to it.
What about FedEx here, Mark? They report earnings tonight. We know that's one of your favorite stocks to watch as like a bellwether for the market.
Well, it was a bellwether, but we didn't pay attention to it in terms of large cap because the market has shifted to value. They've got big headwinds going into the earnings. Every quarter going forward here is going to suffer from comparison with the business boost that they got from the COVID shop at home, stay at home syndrome. So I think FedEx is a tired stock, and I don't see it doing very much here.
Okay. Marc Chaikin is the founder of Chaikin Analytics, a long-time veteran of bull markets, bear markets, sideways markets, corrections, you name it, he's lived it. Marc Chaikin, as always, thanks for the time, sir.
My pleasure. Be well.
All right. 8:28 here.
This guy, I tell you, if anybody has CNBC on, I don't know how looking at this guy can make you bullish.
Oh my God. Is that the CEO?
Yeah.
Who is this guy?
It's the CEO.
Yeah. What is he, a fireman too?
I was just going to say, you better get out to the crossing guard there to help the kids go to school if they're going to school.
He's right there down the line working, and they're building their cars. And
yeah, he's on the assembly line. That's bullish. He's on the assembly line.
Yeah, but it's not moving.
Oh, okay.
The assembly line's not moving. Good observation there. We got an economic number coming, don't we? 1 minute.
Oh yeah, we do.
What do we got? What do we got?
Jobless claims.
Remember, jobless.
Is that going to be a mover for me? I got to go wide.
It's a weekly number. I mean, I don't.
I'm not moving lately on these numbers though. I'm scared. You got me spooked all of a sudden.
You're scared.
All right.
I guess scared.
Let's see what the number is. We're coming.
We'll go to a 1 minute here.
30 seconds. We got a number.
Ooh, 1 minute chart.
Just commenting further on what Mark just said, and I completely agree because I can remember this. But he was saying that in a bull, the final phase of bull market can go nuts, and that's exactly what happened. So we rolled over from 1999 to 2000. I can remember the 3 months from January to March of 2000.
Crazy.
We went from NASDAQ 4,000 to NASDAQ 5,000 in 3 months. And we just were bought. Everything was just getting bought. And you're just like, I can't understand it. It's just buying tech stocks. And here comes a number. I guess it's not going to be a nothing burger because we went wide. It went wide on SPYs, 20 cents. It's 20 cents wide, but I don't see much there. But I guess just to continue my thought, because it doesn't look like the number's going to move the stocks. Then they pulled the rug out from under it in March, and it just never stopped going down for basically a year and a half. And that's when the NASDAQ fell from 5,100 to 1,100. The NASDAQ itself fell 81%. And, that's why you've got to be aware. If you're on margin, if you're just invested for the long haul and you're not on margin, you can take drawdowns of 50%. It's okay. You can. They suck, but you can take it. You're in those stocks, and eventually, 20 years later, Microsoft came back and made new highs 20 years later. But, I mean, if you're on margin and you take a 50% drawdown and you're all tech stocks, then you're a 2-to-1 margin, you're going to get wiped out. So that's why I've always said I don't like investing on margin. You trade on margin, you minimize your damage, you use discipline when you're trading, always cutting your losers. But if you're going all in and you're on margin, I mean, we have a lot of things to worry about here, and maybe it's going to get stupid, and maybe we're just going to keep blasting off, and maybe Zoom's going to go to 1,000. We don't know. Nobody knows anything the path. But if you're just looking for their value hat on and looking at investing right now, and you're saying, we've been saying for a long time, a lot of these valuations are just stupid. Look at what the market has done the last 3 months. It's correcting stupidity. Really, in the last 3 months, the market has corrected stupidity. It's been selling the ridiculously priced stocks and buying the cheap stocks. Value has come back into favor. Does it continue? I mean, that's what it did for 6 years, from 2001 to 2007. It corrected stupidity. So it took 6 years to correct stupidity. Is this the market that we're going into? Are we now in the process of correcting stupidity? That's a big, and we see GameStop, and you're like, yeah, we're in silly town. I mean, there's stupidity still all over the place. But the market is correcting stupidity in certain stocks right now. And I'm not sure if that trend continues or if we just get stupid again. But in the long run, maybe the market is efficient. It just takes years and years to correct stupidity.
Just to recap, finish up the thread on the economic data, we had a couple data points. Jobless claims for last week, 770,000 jobless claims filed for the week of March 12th versus 712,000 the week prior. And this is interesting. The Philly Fed Manufacturing Index for March up to 51.8 versus 23.1 in February. So I guess that goes to what Jay Powell was saying, right? I guess the economy is coming back if that number is to be believed. But jobless claims more than expected. Fed Manufacturing Index, Philly Fed Manufacturing Index, also higher than expected.
Real quick, so just want a question from the chat. Someone about going wide when Dennis says that, and where I say that to him. Dennis makes markets in a lot of stocks, and when there's uncertainty out there, when there's an economic number, he wants to be a safe distance from the market. He doesn't want to get picked off on a surprise like that. So it's just that's part of your market making skills. Eliminate risk on headline numbers.
So what that means, then, just to add more detail, is Dennis is on the bid and the ask simultaneously right. And
I mean, yeah, in some stocks. I mean, you've got it's a better case if you look like a Citadel, or and you look at your market makers on the floor. Citadel's off exchange, but they're on exchange as well. I mean, SPY went 25 cents wide. That's your high frequency trading firm saying, okay, we got a number here, and we're not going to make you a 2-cent market right now in SPY because we have new information coming off, and we don't want to get picked off by faster algos. So we go wider where we feel comfortable making a market. So I might go 20 cents wide. If it's the unemployment number, we sometimes see SPY go 60 cents wide. So the bid and the ask, the difference between the bid and the ask is what we're talking about. Right now, SPY is a nice, tidy 2-3 cent market because it's just pricing off of futures. But if futures go wide, SPY will go wide as well because then you can't arb it. And there's obviously lots of other ETFs to arb back and forth between two. Fungible liquidity is what you call it. But I mean, this is what market makers do to protect themselves because they're coming here trying to make 2-3 cents. You're not going to stand in there when they got an economic number coming out at 8:30 on a 3-cent market, get picked off. Somebody lifts your offer, and you lose $1. So they got to go wider to make up for the risk of getting picked off. It's called adverse selection risk. They've got to go wider to do that.
Can we look at Ride for a second here? Because
sure.
That interview on CNBC is over, and it doesn't seem like it went particularly well for Ride.
Well, they had numbers too, didn't they?
Yeah, they had earnings, and then they also revealed there was an SEC investigation. I think that stems from those often stem from short reports. Whenever a short seller will come out against a stock or company, an SEC investigation will follow. So that's not necessarily indicative of anything bad, but it's still notable. Sounds like the CEO Steve Burns. Sounds like there is some confusion about, and we've seen this sort of thing before, how solid their orders were. We've seen this sort of thing. We saw this with Nikola as well. Is a company says they have orders, but no, they're more like placeholders.
They're not paid orders.
Not paid orders.
And he was on the conference call, and I believe, it was Philip Bo that was saying, because he was following the call, and he's being very careful with how he's saying his words. Saying, they are pre-revenue right now. They're not collecting money. It's basically indications of interest more than anything, these orders. It's not like people are paying, certain amounts of money to get in the queue. It's just indications of interest at this time. So, you're still pre-revenue on this. This is as speculative as it gets. So you can't look at RAI and say, well, it's $30, it's 14, it's going to go back to 30. It doesn't have to do anything. I would say it was SPAC. You're probably going to find support at 10 if it wants to get into silly town and really start to sell off, just because these things. But remember, it's post-deal too, so you don't even have to find support there. I mean, it's ugly. You're in, a deleveraging on, high growth names environment here right now. We've been in that for a while. I mean, you can look at these charts of Ride and DoorDash, and, companies that don't have revenue, the market is not into those right now. The market's been moving into the value trade for months. So this is a classic example of a stock that this market isn't interested in. So like Marc says, I think rallies are to be sold in Ride. It's nice, that it's had a couple little pops in there, and it gets you,
It's crazy it gets those. I wonder how many
times. It had a nice bounce 2 days ago. I mean, it got sold off to 1364 and got all the way up to 1638. I hope maybe Marcus snuck out maybe on one of those bounces because he's good like that. He's managing risk and trying to sneak out of it because we know he was in this one. But you got to be careful of some of these stocks that are just, you can't just say they all come back because we've been in this bull market and it seems like all the stocks come back. And we've been in bailout city where, we've had bag holders getting bailed out for years on different stocks. But we're now, entering this market, I feel like, where some of these stocks are not going to come back. I don't feel like Zoom is ever going to be $550 again. Again, I say that and then it'll come and it'll go there. So you can never say never. But, DoorDash and Zoom, some of these are just, the valuations are so stupid that it's, just... It makes you just think that there's no way it's going to get back there. I just feel like we're almost like in like April or May of 2000 now. I feel like
how could you be bullish Dash if you think that we're coming out of this pandemic?
Doesn't make any sense. That's why it's sold off, Joel. I mean, you're exactly right. You're exactly right. We've got the vaccine. We're coming out of this, and
and you're still gonna
you're gonna go pay a 50% premium for your food to get.
I don't understand it. Like, I still can understand if you get a $10 meal from McDonald's, which would be, I don't know, that's a lot of McDonald's food. Like, what do you have to? What
value menu? You get on that value menu, eh, Joel?
We know Joel's a any kind of guy.
What do you get? I mean, what do they charge? They charge $2 for that? $2.50?
I think more.
Really?
At 50-60%, maybe more.
When you're factoring in the normal delivery fee with the surcharge, with the tip plus the tax, it adds up. It adds up quick.
They're raking. I mean, that's a nice business. But again, like what we were saying when we were talking about the stock about a month ago, and I said I hated it. The main reason was I think there's going to be competition. I mean, those spreads are going to come in. They're not going to be making that kind of money. So if you're, saying, okay, well, they make all this money, they're going to make all, you can project it out and you can see there's going to be so many other delivery services here that are going to do it cheaper.
Can I tell my my Domino's Pizza story?
Quickly, because I want to bring on Buck, but quickly.
Well, they used, when I was in college, they used to have, if they didn't deliver it within 30 minutes, it would be free. And we lived on a one-way street, so if it would be like 28 minutes, we would go park the car. And then the guy would come running up to the door, all sweating, and I couldn't get through. There was a car parked there, and then we get a free pizza.
That's evil.
That's evil. All right, I'm bringing on our next guest here, Buck Andrews, the co-founder of Inform. Gonna get him on now. Buck, how we doing today?
Good morning. Good. How are you guys?
We don't know.
We're confused, Buck.
We don't know how we
confused.
We're confused. I'm so confused. What movie is that from?
Yeah, that happens when when the Fed and the macro is moving the market, right?
Very confusing. What are your thoughts here? I mean, we're in this market where, okay, we're getting hit yesterday morning, but then Powell comes, bails us out, says the rates are never going to go up ever again, basically. And the market rips and rallies, and then we give it all back overnight. So because we gave it all back. I don't know why we gave it all back.
Well, if you look at the 30-year Treasury, the 30-year Treasury is off over 1% this morning.
Yeah, well, that's the reason.
And making new lows. So he said that they were going to do $180 billion of Treasury purchases, right, per month, and that's what they're doing. And they're doing that, and they can't keep the Treasuries up. The Treasuries are still sliding.
That's what I don't understand. The Treasuries are still going down despite
because they can't buy enough Treasuries to keep the Treasury market up. And look at this Philly Fed number. At 51 versus 20, that's hot. the market thinks the economy is going to get hot. The market thinks there's too much stimulus, and they think that interest rates are going up. No matter what the Fed does, they're not going to be able to hold back. It's like putting your finger in a dam.
What does
They're not
that
gonna be able
mean?
to hold
So let's just say that scenario plays out, interest rates do go up, and the Fed can only control the short, they can't control the long. What does that mean for stocks?
Well, essentially, you're seeing it already. I think there was a rotation originally in the tech market, right? In the tech stocks, because they were overvalued. Or you could say potentially overvalued. They've been the hot sector. And then you get the unwinding, and people are heading to the Dows and the Dow Chemicals and the Cats and the John Deeres of the world and the infrastructure plays, right? And the financials and some oils. So a big rotation there, right? But then as is with no recovery in treasuries, and as they continue to slide, every little time you get like the ARCs rallying, or you get these tech stocks rallying, it's met with another slide in interest rates, which brings the tech stocks right back down. So they can't hold their ground.
Yeah.
Right now, and unless we find a plateau for treasuries and techs start to base out, which that's yet to be seen whether that will happen. I just don't know. So the safe plays, I'm holding stuff like Dow Chemical, John Deere, and Caterpillar right now on the long side.
Defensive.
Yeah, totally.
Do you think those are safe? Let's say TLT, let's just set up scenario analysis. TLT continues this cascade lower and we end up like a 120, going down another 10% from where we're at. Do you think, that it continues, like money continues to pile into Deere, Cat, or do they start selling all stocks? They start to just worry about, because eventually bonds can get more attractive at prices where it actually will draw money out of equities altogether.
That's true. And
I'm just wondering. I don't know.
That's true. That can happen. I think we're a ways from seeing that, but I think you're going to have to see some stability in the bond market before you're going to get any permanent lift in the technology stocks.
Why is it tech? Why is it just tech that's getting?
That's
just because the higher. What you're going to ask that?
Yeah. Why are we all picking on tech? It's not.
Yeah. Why just tech? Why do they just pick on tech?
But it's counterintuitive because you would think that tech doesn't have any they don't have any debt, right?
Yeah.
So in a way, it's counterintuitive. You would think that tech would perform better, but it just doesn't. It just doesn't. Usually tech leads the market too, in most scenarios. So if you think tech is leading the market down, eventually, these infrastructure stocks will probably stop going up once they come to a fair valuation. I don't know where we are on that. And there is a big, they're talking about a big infrastructure bill coming through Congress too. It's
And JC is pointing this out in the chat. Obviously we know this. The higher your multiple, the higher the higher your valuation, the more sensitive you are to interest rates. And that's where this divergence occurs, right, between like stocks and like business, right? Because like theoretically, tech has never been better positioned to grow, and yet the stocks are going to be sensitive to any change in the interest rates wins. But it's sort of this weird thing. But that being said, Buck, I
did take a position.
You did take a position. Stock. Yes. Tell us what you bought last week.
No, I didn't buy it last week. I bought it this morning.
This morning, even better.
Whoa, what did you buy?
Better.
I bought Unity Software because it's already down from like 170 to like 90.
Yeah.
So it's already had a big move down. And yesterday, if you look here, they getting to the headline of the new officer down below, you read into the second story down.
Okay.
And you read into that second paragraph. This CFO that they hired, he's leaving a job. He's leaving a job at Palo Alto Networks. Okay, and before that, he was CFO at AWS. And before that, CFO at Cisco. And anybody that leaves a job like Palo Alto Networks to go to a company like this, for me, it gives a lot of credence to the long-term growth of this company.
Kathy's stock too. Kathy's like,
and Kathy's adding.
She's
So
been
that's
adding to this. Yeah.
Yeah.
I mean, and you could get Kathy pops off it.
So I like it. I've started buying this stock this morning, and if it holds and performs well, I'll add to it.
All right.
So that's the one I do like.
Not totally 100% bearish on everything. Taking a position in Unity Software, which is a high flyer.
CCIV, we talked about that last week. That's holding up, and just
Churchill Capital, you're still on?
Yeah, I'm still long that because that came down 50%. I've seen the Lucid studios where they're selling these cars. They look fantastic. Churchill's got an $8 billion valuation. Okay, and it's got a lot of room to grow. So I like that one. It's not frothy here. Also, I saw the CEO the other day or heard him, and he was saying, this is an interesting point about SPACs. You'd think SPACs are highly speculative, but in this case, he got like $4 to $5 billion of operating cash that he says that they will not have to do any kind of raising of capital for at least 2023, which is maybe 2024, and they may not have to at all, which is very different from Tesla, who is having to go out and raise 200 million here, 200 million there. These guys are sitting on $4 to $5 billion. So they can get their job, they can get a product out there without having to raise a lot of capital around it. So that's the other thing. You come in the morning, all of a sudden somebody's raising capital and your stock's down 10%.
Yeah.
That's not going to happen here.
Okay.
All right. So I like that one. One other point, Spencer, is that we now have a community feature. So there's a community list where if you put in stocks into that list, it gives the price point and who put it in. So we can start looking at, if you go to the dashboard over on the right, far right, below the Bitcoin community.
Got a.
All right, so we track the performance of the stocks that have been given.
Okay, so you're crowdsourcing ideas, basically, right?
Essentially, yes.
Yeah.
So we're starting to put in a lot of like social type stuff into the system, so that people can put up their stocks. If you guys hear stocks that you're talking about on the show, that people come on, throw them into the community and watch how they perform.
Buck Andrews is the co-founder of Inform, in4m.info. I'll throw the link back up on the screen here. Buck, is there anything else you mentioned you're pretty defensive. You did take a position in tech. Is there anything else that's like imminently on your radar that you're watching to maybe add a trim here?
Well, you know what? I'm still in these Bitcoin stocks.
You're still in like the ride.
And if you look back at the performance of those, they've been pretty darn good.
Yeah, they've held up.
Riot, I think I mentioned that around low 20s on the show, and it's up to 67. So it's a double since I first mentioned it, and it's held in there. Yeah. So, and I was looking at the news on that too, and they were posting, how much money they're actually making from Bitcoin. The question that I have though is, will Bitcoin hold if interest rates and tech does not hold?
That's a question.
We don't really know because we've never been in an environment.
That's it. Nobody really knows, right?
Nobody knows.
Nobody knows nothing.
I mean,
everybody thinks it's an inflation hedge, but is it the inflation hedge?
I guess, Buck, you could go back to like 2015, 2016 and look at Bitcoin, but that was before it was as mainstream as it is today. Yeah. But I don't know. We don't really know. It's a really good question, honestly. I can't wait.
Yeah. So that's going to be the big question. Does Bitcoin hold up? That will determine whether those stocks hold up, because we do hold some of those. Yeah. And they performed really well. They performed well. CCIV has performed well for us. Believe it or not, we bought AMC down around $7.
You're still holding AMC?
Ooh.
Yeah, we still have AMC.
Okay.
Goodbye.
Very interesting.
We trimmed a little bit out, but we are holders of AMC. We're in it. We're in it for the social aspect.
They're opening up 98% of the movie theaters. Is set overnight.
Exactly.
So another pop on that as well. Story is still intact.
We got Disneyland opening up now in California.
Yeah.
Things are reopening. All right.
Yeah.
It's Buck. We look forward to hearing about your diamond hands next week. Buck Andrews is the co-founder of
I wish I had the diamond hands. I'm not as good as they are.
Not as good. Not as good. That's okay. We can't all be as good as Rowan and Katie. Thanks a lot, Buck.
Okay. Hey, thank you.
Thanks,
Have
Buck.
a good week, guys. Weekend.
All right, and once again, IN4M inform.info. There's the link up on the bottom of the screen. Okay, let's do some ticker time from the chat. I feel like we've been not doing a great job of covering questions from chat, so I want to get to more of those. As Hot Stocks Luke Jacoby tells me to scroll up into my Slack, and I don't know what he wants from me. Luke, what do you want from me? I don't know, man. Okay, let's go to the chat. Any questions from chat? Drop them in. We'll do some ticker time here, and we'll talk about what you want to talk about for a few minutes here. Okay, yeah. We mentioned this earlier. TKAT. This is one of those NFT plays, right? So there's like a half dozen stocks. I'm just going to list you off a bunch of tickers, all right? That are being played as if they're NFT plays, right? OCG, okay, IDEX, GRNQ, TKAT, CNET, CNET, MKGI. There's two more. TAOP and CLPS. Those are stocks that are moving off of the NFT mania, which I think is a fair thing to call it, right? Anyway, TKAT might have been the biggest gainer of that bunch. I'm not quite sure, but regardless, those lists of stocks are moving, are trading as if they are plays on NFT. So
yeah, and there's a bunch of other ones too. I mean, everybody's trying to find a link to NFT because it's a cool thing. It's like blockchain was, we go through these and, we see all those stocks start to go crazy. Where the pony ride ends, we don't know. And the NFT thing is early. I mean, I'm a believer. I was even saying the Kodak could be a potential NFT play as well. Obviously bigger stock, but then it got hammered on the earnings. But still looking at that as, there's potential there too. So lots of potential plays there for, going with this NFT thing. I think NFTs are stupid, but at the same time,
wait a minute. I thought our Hans and Franz thing from was it David is going to be an NFT.
Okay, well, let's sell it. Make $1 million. David some of the money.
We were going to tokenize that. I don't know.
No, but I think it's and that's cool. Like it's fun to do videos and stuff. I just think so not the NFT. I think paying millions of dollars for a screenshot of something is stupid. And I think we'll look back on this investing age and where people are paying $69 million for a digital piece of art, or paying $1 million for a tweet. I think we'll look back on this, and these will be like the poster child things of how stupid investing was in 2021. I think we'll look back and, the digital art, even the crypto, I think the mania and all that. I think that's what this is going to be looked back at. Like we look back always in 1999 and say it was the internet bubble. Is this going to be, the crypto, NFT bubble, all this, just digital asset bubble? I think so. But, where this tops out, who knows? So I'm not saying, go short all these stocks. Absolutely not. I mean, these are storied stocks that can just get carried away. And you know what? Maybe the story for the NFT stuff is still starting. I've tried to, find and play a couple of these stocks as well. So, but as trades, I won't be putting these in my long-term portfolio and forgetting about them because I think when it all ends, I just don't think a piece of digital art's worth $50 million.
Isn't it the thing about art is that you buy something and it's beautiful and like you hang it up in your house?
That's
right?
what I thought.
So people see it.
Rare.
So what do you do? Say, oh, come here and look at my computer?
That's not necessarily true. A lot of people use art as an asset. It's a store of value.
So that's what the argument is that you can store that value digitally as well.
Yeah.
But is it scarce when you can just print it out? Anybody can just print. I mean, you can print out. There's an argument there to be made because you can print out any. You can print out
videos.
If you want.
Can you print videos? I'm not aware of videos that can be printed. All right.
I like, and maybe me and Joel are too old for this, and maybe it is going to be all digital assets in the future, and we're all going to be transacting crypto, and it's all going to be completely different. So that could be the case. I won't be participating in that. Like I said, I have a little bit of
Okay.
Bitcoin for fun, but if the world's going all digital and all our US dollars are going to be worthless, I'm going to be up shit creek. So because I'm not going that way, that's fine. Maybe I'm the idiot here and I should be like Pomp and having 97% of my money in Bitcoin. He's been laughing. I mean, he's killed it. He's killed it with that call. He's been, and let's give him some credit. Marc Yusko as well. Let's give him some credit. I mean, Marc is more, my style.
Marc doesn't have that high of a percentage.
Yeah, exactly. Marc says get off
right,
zero.
right.
And Marc talked me into getting off of zero. We like Marc Yusko. We love Marc Yusko. Comes on the show. The guy's very smart, and he just says get off zero. Pomp is all Bitcoin. It's like 97% of my net worth is in Bitcoin.
Who's that?
Andrew Pompiano, who works with Marc Yusko on the.
Okay.
So he was on he's been on CBC, and he puts his money where his mouth is. He's been right. He's been dead right. So we got to give him credit too. Bitcoin has continued to run. I would never put my 97% of my wealth into a digital currency.
You would put 90% of your wealth into one thing. Yeah, exactly.
I just have a quick question. Shit Creek, is that a creek in Canada?
That's the show. Shit's
that was a good show. That was kind of funny.
Great show. Won a lot of awards.
Okay, wait a minute. I asked for tickers in the chat and then we got distracted. So SOS, Joel, can you give us
SOS? I think that's a tough
save our stock.
Yeah, that's just a tough stock to own. I mean, just on the symbol itself.
Kind of rapid finance.
Oh boy. It's
I'm
down.
not saying it, but smaller Chinese stocks you never really know. Counting over there is sketchy. So I don't know.
Let's just
I like going to the big Chinese companies. I don't like going to the little ones.
Yeah, I would just say first things first here. The 8. Let's get over 8 today. Too high, 788, 796. And then maybe you can make a challenge at this 865. But also matching range days almost on the downside, right? You did take out the low 6. Was that an inside day? No, not an inside day. A little bit of a higher high and a little bit of lower low. So let it shake out. It just seems like there's someone out there selling at 8. That's just what I'm thinking here in SOS Limited, whatever that is.
Question about Neo.
Haven't looked at Neo.
Valuation's nuts, and this is a stock that if the bull market continues, it will be a buying opportunity. It's the kind of stock though that, again, competition all over the place. Yes, they're actually making electric cars, which is excellent, but competition coming for all of these. I mean, I still say there's a reason you see General Motors continuing to go higher here, made new highs again yesterday. Ford sold off a bit because there was some news or something. But, I mean, I think the Ford's a buying opportunity too. I think GM and Ford are going to be major players in EV. And I think when, the dust settles there, there's going to be Tesla, obviously. There's going to be Ford and GM right up there too. Is Neo going to be one of the major players? It's number 2 right now. Yeah, apparently with their electric vehicles, at least they see it as a number 2. I'm not sure that's the case, if it's real or not. I just don't know. The competition is going to get so intense here. I can't pay ridiculous valuations for those kind of plays. I mean, Neo's trading with a market cap more than Ford, is it not? Let's just give it perspective.
I believe so.
Yeah, let's look at the Neo market cap. You got to use, this is what you got to do sometimes. Just use your exercise and use logic.
So 46.
68 billion. This did not work with Tesla, by the way, when I did this, years ago. So, obviously, it's Neo's worth more than Ford. Yep. It's worth a lot more than Ford. It's worth 30% more than Ford. They're going to make a fraction of the vehicles. It's almost worth as much as GM. I would much rather own GM or Ford than Neo.
46 is a pesky area, and you did sneak over it back on the 11th. You snuck over it again on the 15th, but the last 2 days, the sellers have come off 46. They've come down. We're trading down in the pre-market, so also that high at a little bit above that. I don't know, just until this clears 46, kind of got hit after earnings, and if this can't clear 46, hold 46 in a jiffy here, I think you roll over, take back some of this rally. Where to get down to 31.67, maybe get back half of that rally, 15-point rally, 7.5. That'll take you down to the 37.38 area. That's what I'm looking at in NIO.
Let's do one more Dennis's favorite stock, which is Woof.
Talk about dogs barking. There you go. I don't even
that was
remember
JC,
saying
right?
that one.
What now? What do you mean? That was you and Dennis. What?
I don't remember. Okay. I don't remember saying that.
Here, I'll play it.
I think you made that up.
I'll play it again.
Talk about dogs barking. There you go.
Kind of sound like JC there.
I don't know where you found that one. That's ridiculous.
It was 5 years ago, Dennis.
Nice pop.
Jeez.
Yeah, that's why
Wolf
I can't remember
Petco.
5 minutes ago.
Woof. Woof.
Petco Health, they had earnings this morning. EPS beat, sales beat. They gave guidance for the year. EPS well above the guidance, the estimate, well above the estimate.
How much they make?
How much did they make last quarter? Their sales are $1.3 billion, 1.34. This is what they guided, though.
What are their earnings?
They guided for the year, adjusted EPS in like the 63 to 66 cent per share range, and the estimate was at 23 cents per share. So they guided well above the EPS estimate.
That's for the entire year. They're going to make
for the year. That's for the year. They guided well above the EPS estimate for the year. Sales also about sales for the year. The guiding in like $5.25 billion, which was above the estimate as well, 4.89. So estimates well above. I'm sorry, numbers well above estimates for the year in Wolf.
Get me to 26 here.
Yeah.
Show me you can get to 26. You had a high at 26.24 on one day, 25.98 the other day. Where are we at here? We're at 25.10. So longer it takes to clear, get that, take out 26 and keep on going, maybe roll over a little bit. But that's a really good number. After it came down, it just kind of held there, and then it really broke down on February 16th. So that's my
How is
number
this
on the
different than
upside.
Chewy? What do they do different? This is online pet food.
Well,
This is.
it's Petco, right? It's also
Is it like the physical stores that we see Petco, like the
Brick and
physical
mortar.
stores?
Yeah, you're talking the physical store and online.
You get
And one,
both.
one thing that I can tell you that Wolf has an advantage now is they're using their stores like their delivery thing. So they're giving you a discount if you go and pick up. If you do pick up, you get about 25% off. So this is helping them. I think, they changed this around in the pandemic. They used to not have a pickup service. And I think this is definitely helping them.
All right, we got a super chat. One more, American Outdoor, ALUT. This is the spinoff from Smith and Wesson. This is not the firearm assets. This is like everything else. This is their outdoor recreation thing. They had earnings last night. Their EPS was up year over year. Their sales were up year over year. They gave guidance for the year well above estimates.
Outdoor stuff is still hot, and I think it still stays hot. Breaking out to new highs, and I don't. When they're breaking out to new highs, I don't short them. I don't like buying rips, so I'd like a pullback to buy it, but it's a breakout. Looks pretty good on the charts.
Yeah, I mean, what are you going to do? This thing is not quite the all-time high. That would be 30. So that was on when it re-IPO'd. Just take it through the pre-market high right now, 26.48. You're right there right now. I think if you're looking exit along, maybe see if you get lifted at 27, see if you get lifted at 27 and a half, see how what their appetite is on the upside, because the only thing you have is that opening high at 30.01. That was back in August of last year.
All right, we spent the entirety of this show pretty much trying to hold up in the S&Ps, and I guess it's working for now.
Doing okay.
Yeah, we're doing okay. All right, that'll be a wrap for Pre-Market Prep. Everyone, please remember that all the information on our show is meant to be used as informational purposes, not for investing or trading advice. You can also catch this show on a podcast. If you are busy and in the car or whatever, you don't want to actually stare at a screen, you want to listen, that's fine too. We're on all the major podcast platforms: Spotify, iTunes, Google Podcasts, Stitcher, TuneIn, all the major ones. Just search Benzinga or Pre-Market Prep to find it. And thanks to our guests today. Thanks to both of them, Marc and Buck Andrews. Once again, today's show sponsored by Inform. To learn more, go to in4m.info. Joel, I will catch you for the At the Close show at 3:30.
Yeah, we'll see. Get some fireworks. All right.
It's going to be a very interesting day, that's for sure. Joel, I'll see you later.
All right.